Hey everyone, Couch Investor back to another video for today. So in today's video, we're going to go over the Coinbase earnings report. Of course, with Coinbase, you know the whole story, right? In a bull market, the company went obviously public. You can see that the company was extremely profitable when things were going the right way when it comes to crypto. It was before the Luna crash, it was before FTX, it was before, the whole crypto market basically crashed, just like the stock market, right? We're in the bull market, now we're in the bear market, plus some companies blew up the crypto markets as well. So their profitability of the business went down the drain as well. And this is something that you have to take into consideration when you're investing in a company like Coinbase. What you also have to think about is obviously regulations. In my opinion, Coinbase, yes, of course, it goes against everything that OG crypto people will say, being regulated, right? You want to be decentralized. Well, let's face it, if you want to invest in a publicly traded company that is into the crypto world, obviously things will get regulated. And I think regulations is good. Not all regulations, but I think regulations in the crypto market could have saved a lot of people a lot of money. Of course, rule number one in crypto is don't keep your assets on an exchange. That's rule number one. If you do that, well, then you're safe no matter what happens. If you do keep your assets on the exchange and then that exchange blows up or suddenly does not let you trade anymore, well, that's just your fault. Now, with Coinbase, of course, we will always hear new things coming out, whether it's for staking, whether it's with Ripple or XRP. If you don't know the story, just Google it or Bing it. I mean, this is normal. In a new and emerging market, there will always be questions, there will always be articles coming out that, oh, there's an investigation with Coinbase, etc., and that might move the stock. But overall, to me, yes, I think that Coinbase is the most regulated company when it comes to crypto in the whole industry, right? For some people, they say it might be bad. I think it's a good thing because regulations is coming. They know it, I know it. Basically, everybody in the crypto industry knows it, and I think it's going to be a positive. That's just it. Now, purely when it comes to Coinbase right now, the state of the company, of course, the stock has seen better days, even though the stock is up around 100% since the bottom, and it was up close to 150% just a couple of weeks ago. So the stock has seen better days. In the short term, it has seen very, very good days. But let's see financially how the company is doing right now with all the, cost cuts, layoffs, etc., the current market environment. Let's see how healthy the company is. At the time of making this video, the stock is up around 2 to 3% or so, so not that much. They did beat on earnings per share and on revenue estimates, so that's fine. We're going to have a look at the graph at the end of this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me even further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So let's start with a couple of, let's say, chapter things that they mention here. So first up, revenue has been diversifying with Q4 net revenues increasing 5% quarter over quarter, driven by subscription and services. Remember, last quarter, this was already one segment that performed very well and everybody was surprised. And I think this is a big positive for Coinbase as a business and as an investment. I think being too concentrated on just transaction fees made this investment way too risky, of course, during crypto winters. We know that transactions are going down, so it's nice to see that another segment has grown and has become a bit bigger, which makes, again, the investment in this company a bit more diversified. Now, they say here, while transaction revenues declined 12% quarter over quarter in Q4, subscription and services revenue grew 34% quarter over quarter to $283 million. Of course, we had the FTX blow up, let's say. I thought there would maybe be more people that would come to Coinbase, but maybe we will see these effects in the next quarters. Let's wait and see. Then they say here, they've cut our expenses and are positioning Coinbase for improving financial performance. We anticipate that our recent headcount reduction and ongoing cost management efforts will result in a 30% plus reduction in technology and development, sales and marketing, and general and administrative expenses in Q1 2023 compared to Q4 2022. You will see why this is such a big deal because, overall in 2022 compared to 2021, those have increased quite a lot. And now as for their outlook, they are operating towards a goal of improving full year 2023 adjusted EBITDA in absolute dollar terms versus full year 2022, and believe their recent cost reduction efforts help us to do so. When Coinbase went public, our goal was to operate at roughly break even across each crypto cycle. We have evolved our approach and are now setting our sights on positioning the company to generate adjusted EBITDA in all market conditions. Of course, this will make this investment way better from a balancing standpoint, because of course during a bull market this becomes a great company, during a bear market not so much. So as for an investor standpoint, this becomes maybe a more like a trading vehicle, which again just doesn't make any sense. Now when it comes to the financial metrics for this year and the full year, basically you can clearly see, right, 2021 to 2022, basically the business has been cut in half. We were very, very profitable before, now not so much, a loss of $2.6 billion. Adjusted EBITDA went from just over $4 billion to now negative $371 million, which again was better than expected. But you can clearly see the difference between a bull market and a bear market. Now, overall, when it comes to the crypto market, of course, they talk here about Luna, about FTX, but they say here average Bitcoin prices in January 2023 were still up 80+% compared to the average price in 2020, which means that yes, even after this crypto winter, we're still having higher prices just at the Bitcoin level right here. Of course, other cryptos might have become, well, a zero. Bitcoin, since it's the number one, let's say, is still much higher than 2 years ago when we started that huge bull cycle. So I guess that's one positive. Then they give us some extra information here with some brands and some other markets that they entered or that evolved. But I would like to touch on this right here when it comes to Coinbase specifically. So trading volume grew to $830 billion in 2022 from $193 billion in 2020. Subscription and services revenue grew over 17 times to nearly $800 million in 2022 from less than $50 million in 2020. Roughly 25% of the top 100 largest hedge funds in the world by reported asset under management have chosen to onboard with Coinbase, up from a handful at the end of 2020. And this goes back to the importance of Coinbase being regulated, being trusted by the biggest institutions out there. If you're not trusted, if you're not being regulated, if you're not operating according to the rules, none of these huge hedge funds would want to work with you. And the proof is in the pudding here. I love to use that sentence now. They announced industry-leading partnerships, including with BlackRock. Do you think that BlackRock would have worked with them if they were not regulated, if they were not really, doing everything according to the books or as close to? No. Continuing here on what I said before when it comes to the diversification of revenue. So total transaction revenue, of course, year over year, were down by a lot. Quarter over quarter were down as well. But if we go to subscription and services revenue, has grown quarter over quarter quite nicely over the last couple of quarters as well. And then year over year, also a big increase here from 2021 to 2022. And this is great for the future of this business. More diversification, less dependency on transaction revenue. Of course, this is still a huge, huge difference, right? But it's still nice to see. And yes, interest income has, let's say, the biggest impact here. Why is that? Well, because of the high interest rate environment that we're now, this segment here benefits from that. Of course, that will die down a little bit as hopefully interest rates are coming down maybe later this year, maybe starting in 2024. Then, of course, when it comes to all the rest, trading volume in billions or as a percentage of, or transaction value as a percentage of total, of course, every metric here is down year over year, or maybe just a little bit of the same, right? Ethereum transaction revenue percentage of the total, still quite the same, 21% to 22%. Bitcoin has actually increased a little bit, so the Bitcoin dominance right here has increased, but overall, nothing too surprising here. Then when it comes to expenses, and in this case, headcount, so they anticipate that January 2023 headcount reduction and ongoing across-the-board cost management efforts will result in a greater than 30% reduction in Q1 technology, the thing what we have said before, which you can clearly see right here, right? This segment, I don't know why it's selecting something else, but I hope you get the picture here. Total operating expenses, 2021, 2022, big increase there. Where did we see the huge increase? Well, first of all, restructuring went from 0 to 40.7 million, but then technology and development, basically $1 billion increase there. G&A, $700 million increase there. And that's how you get that close to $1.2 billion increase in total operating expenses. That should become much better this year. Now, of course, when it comes to the profitability of the business, if they keep losing this much money over the long term, this becomes an issue. But right now, they ended Q4 with $5.5 billion in total available USD resources, which they define as cash and cash equivalents, USDC, and custodial account over funding. So they have enough money on the side to survive a while longer. Of course, taking everything into consideration, I don't think we're going to be in this horrible situation that we've been in the last year when it comes to crypto or just Coinbase specifically. So I think at $5.5 billion here will suffice to survive. I don't think they're in any financial situation where bankruptcy is looming. Now, when it comes to outlook in Q1 2023, they say here that the crypto markets have improved thus far compared to Q4. Total crypto market cap is up 40% year to date through January 17. In addition, the crypto asset volatility is 5% higher over this same time period compared to Q4. These market dynamics are reflected in our trading business. We have generated $120 million of transaction revenue in January 2023. So of course, things are getting a bit better for the company right now. Now, when it comes to the overall Q1 outlook, subscription and services revenue will be between $300 and $325 million. So again, a nice little increase there. Transaction expense, mid-teens as a percentage of revenue. Technology and development plus G&A expenses will be $625 to $675 million. This includes $200 million in stock-based compensation. Sales and marketing expense, again, between $60 and $70 million, including a $15 million stock-based compensation, and then restructuring expense, approximately $150 million. And now last thing here before we conclude this video, as you can see, right, we had, as I said at the start of this video, we have a huge increase in stock price, 160%, well, a bit more till the peak. Right now, we're still up 90% from the lows back in January. What is interesting here is that we can see this is again on the weekly chart. Last week, we rebounded above that 50-day moving average. Right now, we're sitting just above that 20-day moving average, of course, with the stock being up 2 to 3% right now. Let's try and end the week above that red line right here. Even though the market on Tuesday were pretty red, we still managed to stay above that 20-day moving average. Let's see how the week will end. But currently, things are looking okay, not too bad for the stock, even though it's up still 90% since the start of the year, so quite okay. Now, overall, to conclude, things are looking a bit better for Coinbase. Of course, it being linked with crypto, it will always face volatility, it will always face scrutiny and some risks attached to it. To me, it's very simple. If you want exposure to blockchain, to crypto, I think the way to go is Coinbase. Of course, some other people would say just buy Ethereum or just buy Bitcoin, and that's about it. It's completely fine. That's completely fine. I think you can think about it both ways. To me, as an investment in the stock market, I think just go with Coinbase if you want to. You don't have to, right? Because I know it's very popular. Oh, crypto. You don't have to have exposure to crypto. You can, you don't have to. I have exposure through Square as well, even though Bitcoin there is not that much. It's still just 2% of gross profit. But hey, everybody does what is best for his portfolio. Just know the risks, but know the rewards as well. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.